Guys, today we will talk about the cryptocurrency trading. What is cryptocurrency trading? Cryptocurrency trading is the act of speculating on cryptocurrency price movements via CFD trading accounts, or buying or selling underlying coins via an exchange. CFD trading on cryptocurrency. CFD trading are the diversities which enable you to speculate on cryptocurrency price movements without taking ownership of the underlying coins. You can go long buy if you think cryptocurrency will rise in the value, or short if you think it will fall. Both are leveraged products, meaning you will only need to put up a small deposit known as a margin to gain full exposure to the underlying market. Your profit or loss are still calculated according to the full size of your position, so leverage will magnify both profits and losses. Buying and selling cryptocurrencies via an exchange. When you buy cryptocurrencies via an exchange, you purchase the coin themselves. You will need to create an exchange account, put up in the full value of the assets to the open the position, and store cryptocurrency token in your own wallet until you are ready to sell. Exchange bring their own steep learning curves, and you will need to get grips with the technology involved and learn how to make sense of the data. Many exchanges also have limits on how much you can deposit, while accounts can be very expensive to maintain. How do you cryptocurrency market work? Cryptocurrency market are which is means that they are not issued or blocked by the central authority such as a government. Instead, they run across the network of the computers. However, cryptocurrency can bought and sold via exchange and stored in the wallet. Unlike traditional currencies, cryptocurrencies exist only in the shared digital record of ownership stored on the blockchain. When a user wants to send a cryptocurrency units to another user, they send it into the user digital wallet. The transaction isn't considered final until it has been verified and added to the blockchain through a process called mining. This is also how new cryptocurrency token are usually created. What is blockchain? Blockchain is shared a digital register of recorded data for cryptocurrencies. This is the transaction history of every unit of the cryptocurrency, which shows how ownership has changed over time. Blockchain works by the recording transaction in blocks, with the new blocks added to the front of the chain. Network concession. A blockchain file is always stored in a multiple computer across the network rather than the single location, and usually readable by the everyone within the network. This make a both transparent and very difficult to alter, which altered with one weak point valuable to hacks the human software error. Cryptography. Blocks are linked together by cryptographic complex mechanism and the computer science. Any attempt of altered data disputes and the cryptographic link between the block and can quickly identify the frequent by the computer in the network. What is cryptocurrency mining? Cryptocurrency mining is a process by which recent cryptocurrency transactions are checked and new blocks are added to the blockchain. Checking transaction. Mining computer select the pending transaction from the pool and check the ensure that the sender and sufficient funds to complete the transaction. This involves the checking of the transaction details against the transaction history stored in the blockchain. The second check confirm that the sender authorized the transfer of the funds using their private key. Creating new block. Mining computers compile wild transaction into the new block and attempt to generate a cryptocurrency link to the previous block by the finding a solution to complex algorithm. When a computer succeed in generating the link, it add the block to it the new version of the blockchain file, and the broadcast of the update across the network. And there is a process of the miner consolidate recent cryptocurrency transaction into a block, and block cryptography secure the link existing in the blockchain, and then the main earns the block reward, which they can inject directly back to the market. What moves cryptocurrency market? The cryptocurrency market moves according to the supply and demand.